housekeeping rules. Please remember to always keep your microphone muted. Always remember also to keep yourself on the move, on motion with whatever is going on, because we have rewards today also. The house rules are live now for you. Keep your microphone muted unless asked to speak. In case a point is not clear, please raise your hand. For any questions, use the Q&A section on the chat section, and please fill in the feedback forms that will be sent to you. The link will be sent as soon as we begin, so that you are able to give elaborate, precise, deep, in-depth feedback. Now, ladies and gentlemen, we also welcome you so much to enjoy what we have in store today. Our first presentation today will be on expanding markets to attain growth, FinTech global market opportunities and strategies. It will be presented by Mr. Richard Leftley, and our paper chair is Mr. Gabriel Karungu. Now, I want to also remind us that we have our hashtag. The hashtag is hashtag IIK Conference 2020. Make sure that you tweet there. Make sure whenever you're tweeting, you tag, and you never know what we have in store for you. We also request you to follow our presentations, because at the end of presentations, we'll be having something for you. I am confirming that somebody got something yesterday, and today we want to get as many winners as possible. Our director has appreciated our sponsors. We still want to remind you, thank you so much, our gold sponsors, and thank you so much, our silver sponsors. We sincerely appreciate you. The gold sponsor is IRA. Our silver sponsors are AAR, Madison, and Africa Re. We thank you so much. Our bronze sponsors, we sincerely appreciate you in a very special way. Now, I want to introduce to you Mr. Gabriel Karungu, who is the Executive Director of McLaren, trading as Independent Adjusters Kenya Limited, Chartered Laws Adjusters Surveyors. He has previously worked in reinsurance, underwriting claims, and has over 20 years of experience in both local and international loss adjustment, risk assessment, and management. He is a Chartered Institute practitioner and a Chartered Loss Adjuster under the Chartered Insurance Institute, that is CII, and Chartered Insurance Institute of Loss Adjuster, that is CILA. He has served in various capacities in the Insurance Institute of Kenya, Executive Council, and is a past director of the Institute. He has also served as a council member in the Institute of Loss Adjusters and Risk Surveyors, including a Secretary General and a chairman of the Loss Adjusters chapter. He is also a past chairman of the then Kenya National Insurance Examinations Board, now Interim Examination Council, and College of Insurance. These are the people who said for us those tough exams for diploma. Thank you. He has served as a trustee of the Insurance Training and Education Trust board. He is a past vice chairman of the board and steered the joint book writing committee. Ladies and gentlemen, we are having a paper chair who is blessed, endowed, and given the ability to handle issues around the field of insurance. Having had the vast experience, I have the pleasure and privilege to welcome him, and having passed exams in the College of Insurance, I can assure him that those exams are tough, but the tough get going. So you can imagine how tough I can get. Welcome on board, all of us, and let us welcome Mr. Gabriel Karungu. Karibu. Gabriel, kindly unmute. We have not heard you so far. Okay, now you can start again by congratulating me.
Thank you very much. I'm sure Richard will deal with the technology issues. So you can see we are behind a little. So anyway, thank you very much, and most welcome everybody. I am glad to be back in IIK and be able to share this paper. It could not have come at a better time given the challenges that we have with COVID-19 and the need to continue evolving as the previous papers have suggested. So mine is to introduce Richard, who will be taking us through this paper. And Richard started working on microinsurance in January 2002 when he joined Opportunity International, a leading microfinance provider from Benfield Clegg, now Aon Benfield, a global insurance intermediary. At Benfield, he worked as an insurance broker responsible for the African account and worked in a team covering the Middle East and Southeast Asia. So Richard is very well conversant with our market, with our African market, and we could not have had a better presenter. Richard pioneered the introduction of insurance products within the Opportunity Network, which led to the establishment of MicroInsure in 2006. As a leading insurance intermediary for the mass market, MicroInsure provides life, health, and weather index insurance to over 60 million people in 16 countries in Africa and Asia. In July 2020, MicroInsure merged with STP Risk and Tonka BI to form the microinsurance company. Richard also served on the steering committee of the ILO Microinsurance Innovation Fund, a $35 million fund provided by the Gates Foundation, and has served as a member of the Microinsurance Network Board. So welcome on board, Richard. I would advise delegates to be objective and also to be inquisitive. And also let us also try to listen to Richard with an open mind. I know we generally are very conservative. And indeed, if we do not adopt the emerging trends, we are likely to find ourselves in the back burner when it comes to insurance. So welcome on board, Richard. Thank you very much.
Thank you. No, it's good to be with you today. I'm going to try and share my screen with you so that I can take you through the slides. Can you see my presentation? Could someone just confirm they can see the slides?
Yes, we can.
Oh, good.
Richard,
excellent.
we can see the presentation.
Excellent, excellent. Thank you very much. It's good to know the technology is working. And good morning to you in Kenya. It's bright and early here. It's 6:10 in London. So the sun hasn't yet come over the horizon, but it's nice to be with you, and thank you for having me. As introduced, my name is Richard Leftley. Been involved in the provision of insurance to the mass market, to low income and to middle income sectors for the last 20 years. So my journey with microinsurance really started in Zambia, actually. It started way back where when I remember sitting with a family who had been affected by HIV. This family, the mother of the family was in fact a school teacher, and her husband had been a security guard. And they had been living in the capital city of Lusaka in an apartment. They had a motorbike. And when I met them, they were back in the village with virtually nothing, with one set of clothes, with no shoes. And the lady, the mother, explained that actually she felt like her life was a little bit like the child's game of snakes and ladders. You know, she'd been trying to work her way out of poverty all of her life. And then when bad things happened, she felt like she had just bounced back and been down at the bottom of the board. You know, so she challenged me and she asked me what it is that we could do to help her from sliding back down to the bottom of the board, to sliding back into poverty when disaster struck. And of course, that is what insurance is for. And yet today, in many markets, including unfortunately in Kenya, the vast majority of the citizens still don't have insurance. Almost 97% of people don't have insurance. So, you know, this safety net that we take for granted, this safety net that we work so hard to provide, the majority of people in Kenya still haven't even used. So for us, for me, this became a personal mission of trying to make insurance accessible to the masses, to the 97% who have never had insurance. So just very briefly, it's not going to be all about marketing today from my side. This new company called the Microinsurance Company, it's a reinsurance company, and it's a combination of microinsure. Microinsure has been in the market for 20 years, as I said. It's been in Kenya for nearly 10 years, working with many of the local insurance companies. And we will continue to operate as Microinsure in Kenya. So we're continuing to be that broker. and work with many of the local insurance companies. But we also now have a reinsurance company, and we can underwrite risks also through that reinsurance company. So we combined ourselves with STP. STP is the reinsurance company, and with a company called Tonka BI, which is a artificial intelligence, an AI company based in India, and we're using that technology in a lot of what we do. So just very briefly on our story, as I said, we started in 2002. We were heavily funded originally by the Bill and Melinda Gates Foundation. They gave us a grant of $24 million, which was a huge help in getting us kind of started and to reach many, many clients. By 2010, we'd started to work with mobile phone companies. So our first kind of real experience here was with a company called Tigo in Ghana. And I'm going to talk a little bit about some of those experiences today of working with mobile phone companies. By 2014, AXA, a big French insurance company, had become one of our key investors. And by 2015, we were getting really successful. We were signing up clients very quickly. In fact, we signed up 20 million customers in just 150 days in 2015. So by the power of technology that I'm going to talk to you about today, we've really seen some kind of very rapid growth in our business. Okay, so I want to take you back on a journey. I want to take you back to 2009. This is when MicroInsure, my team, started to work with mobile phone companies. So when we first started working with mobile phone companies, we had to start with an understanding, I guess, of the reality. And the reality, I think, is in the blue box. So what we'd realized over many years of working in this market is that I think it's true that none of our clients wake up in the morning wanting to buy insurance. If you think about, if you're honest with yourself, you yourself didn't wake up this morning wanting to buy insurance. But I think it's true that people do wake up worrying about the risks they face. Agnes, in her introductory speech, was talking about that gentleman sitting by the bus stop with his shoes off last night. And I'm sure that he, with his head in his hands, had many, many risks, many things that he was worried about. And it is a tough time, and people are worried about the risks that they face. But it's true that people don't wake up wanting to buy insurance. If you don't believe me, then the truth is in the statistics. The truth is that as insurance companies, many of you have operated for many, many years in Kenya. And the truth is that 97% of people still don't have insurance. So people, it's not because insurance companies don't exist that people are not buying insurance. Insurance companies exist. No one wakes up wanting to buy insurance. So we also realized that these mobile phone companies, these telcos, they really suffered pressure. One of the big pressures they were facing was a reduction in revenue. So they track something called ARPU, ARPU, and ARPU stands for average revenue per user. So this is basically how much top up, how much airtime people are spending on their phones. And of course, what we see in many markets, maybe not so much in Kenya, but in many markets, is that everyone has multiple SIM cards. Everyone has Safaricom, but they also have Airtel, or they have Vodafone, or they have whatever, or they have other kind of SIM cards, and they split the amount that they top up between these various SIM cards. So we were seeing huge amounts of SIM switching, people taking a SIM card, using it for a few months, and then discarding it. And huge amounts of customer churn within the telco customer base. And so what we did back in 2009 was we combined these two facts. We combined the fact that no one wakes up wanting to buy insurance, but they are worried about risk on one hand. And on the other hand, we combined the fact that customers really weren't very loyal to their mobile phone company. And we use these two things to introduce a new approach of providing insurance. And this is these three phases that I talk about. So the first phase was that we introduced free insurance. So actually we introduced insurance which was free to the users. All you had to do was top up airtime, and the more top up the more you topped up with your mobile phone, the more free insurance you got. And we'll look at some of those models. The next phase was what we called the freemium upsell. So this was where having onboarded people, having got people to buy, to use insurance for the first time using phase one. With phase two, what we started to do was to say, hey, if you'd like to keep the insurance, or if you'd like to add your spouse or add your children, then you can start paying for insurance in a small way. And then the third phase was a full retail upsell, where we having onboarded people and they'd overcome their kind of reluctance to purchase insurance, we then started to sell them a wider range of products. So I'm going to share with you a number of case studies. The first case study is from Airtel. So Airtel operated across Africa. They had a regional head office in Nairobi. I'm sure you've driven past their building many times on the way to the airport. I've been in their office many times, and it's been my pleasure to be in Nairobi many times. I have hundreds of times over the course of the last 20 years. And this relationship with Airtel, it started about 5 or 6 years ago now, and we actually introduced insurance to more than 8 million customers across 8 different countries over the course of 18 months. I'm going to talk a little bit about one of these products, and I'm going to talk about the one which we introduced in Ghana, partly because it's in Ghana and not in Kenya, because obviously most of you are in Kenya, and I want to avoid kind of sharing any kind of sensitive details with you. So this is the product which I want to talk about a little bit. It was launched in Ghana in January 2014. It's no longer in the market, so I can talk freely about it. I think it's kind of interesting. The first thing I want you to notice about this product is that Airtel's color is red. And I don't know if you noticed, but if you look at the promotional material there, do you notice that it's really red? And actually, do you notice that the insurance company's name is somewhat absent, right? So down the bottom on this flyer, you can see the name of the insurance company. The name of the insurance company is Enterprise, and there is Microinsurer's logo as well. But do you know, people, I know this is going to sound difficult to you, but many people don't trust insurance companies. I don't know if you've noticed this, but the reason that people trust, and I'm not going to go into, my intention today is not to give insurance companies a hard time, far from it. I think insurance companies are wonderful, but people trust their mobile phone company. And have you ever wondered why that is? My experience is that people trust their mobile phone company because they use the mobile phone company regularly. And so when they buy airtime, it works. They purchase airtime, they top up their phone, and when they top up the phone, it just works. And they do this every 3 days, every 5 days, every 7, however often they do it, it works and it works and it works. And so when that brand, when that organization, when Airtel in this case, turns around and says, if something bad happens to you in terms of life or accident or hospitalization, then we will be there for you, we will help you. And people believe it because Airtel is a brand which they trust, because when they top up, it works. And so using the brand of the telco rather than the brand of the insurance company has been critical in the success of these products. So this product launched in 2014. At the top here, you can see phase 1, 2014. So this was how much you had to top up. This was roughly $1 to $2, $2 to $4, etc. And so the more you topped up, the more free insurance you got. And the basis of this kind of business case for Airtel was that they were trying to encourage people to top up more with Airtel rather than with other mobile phone companies. So did it work? So, okay, here was the split of kind of roles and responsibilities for this product. So Airtel's job was essentially to provide the client base and to provide the marketing. The insurance company's job was to underwrite the risk and to liaise with the regulator, and everything else in terms of the operation. So designing the product, selling the insurance, collecting the premiums, answering the customer questions, and even handling the claims and being like a TPA was done by Microinsurer. Okay, so did it work? So this is what we did was, with all of our products, we do a lot of data analysis. So this was, what we did was we took two groups of customers. The first group was called the control group. This is in light blue. And this is about 100,000 Airtel subscribers who are topping up their phones with airtime. And then we then looked at another group of about 100,000 customers who had insurance, and these are the dark blue. So the insurance was launched in January. So we tracked the customers in October, November, December to make sure that they roughly had the same behavior. So if you look at October, November, December, the blue bars, both the light blue and the dark blue, are roughly the same kind of size. These customers are topping up their phones with roughly the same amount of insurance. And there in January, insurance is launched, and suddenly people are being encouraged, top up more and you get more free insurance. And guess what? What do you see? The blue bar, the dark blue bar, becomes a lot larger than the light blue bar. So this was people increasing the amount that they topped up their phones because they now have a reason, right? They now have a reason for buying insurance. And when we kind of look into this in more detail, if we split down these customers into how much they're topping up. So second quartile, these are people that are topping up just less than average. Third quartile, these are people that are topping up just more than average. And then the fourth quartile, these are the people that are topping up their phones a lot. These are the kind of high spenders for the mobile phone company. And what we noticed was that actually the biggest change in behavior was for the lower spending customers. So these are people that are SIM switchers. These are people that have multiple SIM cards. And these are people who have the biggest opportunity to change their behavior. So actually the product was working, but it wasn't working for all customers. So for those customers who are higher topping up customers, they weren't actually changing their behavior very much. And so for Airtel, this was a waste of money. So in many ways, the product was working, but it wasn't working as intended. So at Microinsure, we take this very seriously, and we realized that actually we needed to make some changes. Let me use another kind of example. Many of you will be frequent flyers. Many of you will be people that fly very frequently. And if you fly with Kenya Airways frequently, or with Emirates or with any of the airlines frequently, then they give you points, right? And so you start off as a silver member, then or a bronze member, then you become a silver member, then you become a gold member. And each time you graduate, you receive more benefits like access to the lounge or free upgrades to business class. There are, it's true to say that people that travel a lot, these kind of membership or these kind of frequent flyer programs don't really change their behavior. I mean, I fly a lot, and or before COVID, I flew a lot, and I wouldn't fly anymore because of the frequent flyer program. I fly because I need to go on business. I need to go to Kenya. I need to go to Uganda. I need to go to Ghana. But I would be very annoyed if I saw that some guy who doesn't fly very much was getting better benefits than me. So if the guy who was a silver card holder was getting better benefits than me as a gold card holder, I'd be very annoyed. And so many businesses have to reward their most frequent users, even though it doesn't change their behavior. And so that's quite inefficient as a kind of loyalty mechanism. So at Microinsure, we realized that we needed to evolve this model. And what we did was we decided that we were going to introduce these kind of loyalty mechanisms that would respond to the individual client. So let me give you an example of how this worked. So this is another case study. This case study is in India. This is the mobile phone company is Telenor. And Telenor is a mobile phone company, or was a mobile phone company in India. We noticed that the branding here, again, it's blue, and down the bottom here is the insurance company. So again, this is Telenor's branding is being used to push forward these products. So what did Telenor want to do? Telenor wanted to gain more market share. So they wanted more SIM cards. They had about 50 million subscribers, Telenor, but the largest mobile phone companies in India have about 250 million customers. It's a huge country, India. And they also wanted to increase ARPU. They wanted to increase the amount that people topped up their phone. So we introduced this product to the market. It was a very simple life insurance product. Interestingly, what we noticed from previous product launches was that many customers were nervous about giving very basic information. So when we were signing up people to these insurance products using a USSD, we noticed that many of the clients didn't want to give us their name, their age, or the next of kin. And when we dug into this, what we found out was that many of these clients actually don't have a birth certificate. And this will be common knowledge to you. Many people, even in Kenya, and in the low income sector, don't even, if they're born in a rural area in the 1970s or 1980s, or even 1990s, you don't have a birth certificate. And so if someone is asking you, over a USSD, what is your age? You may know that you're 33 years old, or you may know that you're 45 years old, but you don't know exactly what day you were born on. And even if you do, you don't have a birth certificate. So if someone is asking your name, then, is asking your age, then your concern is that when I come to make a claim, I won't be able to prove how old I am. I won't be able to demonstrate my age through a birth certificate, and therefore this product isn't for me. This product isn't for me because I don't have the right documentation. And so we noticed that we were losing a lot of clients by just asking these three questions: what's your name, what's your age, and what's your next of kin? So with this product in India, we actually enabled people to sign up by just sending a text message. So we made it as easy as buying a ringtone. That was the model that we wanted to try here in India. And as a result, we signed up 20 million customers in just 150 days, which was a huge, I think it was the fastest growing financial or insurance product anywhere in the world. I think the Guinness Book of Records actually gave us a record for this one. And the way that this product worked was that we looked at how much people had topped up. So if Godfrey had topped up 100 shillings historically, so if his average top up was 100 shillings, then when Godfrey signed up for insurance, we would send him a text message saying, welcome to insurance. If you want to benefit from free insurance, you have to top up 120 shillings. And if Agnes had been topping up 300 shillings historically, then we would send her a message saying, hey, welcome to free insurance. If you want to benefit from free insurance, you now need to top up 350 shillings. So each individual would receive an offer depending upon their own past history. It wasn't a one size fits all. Instead, it was an individual offer that was being made to these people. And of course, the incremental, the extra recharge that we were asking people to make, that more than covered the cost of insurance. So the business case for Telenor therefore became at the individual level, not at the group level. Okay, so we've been talking a little bit about these kind of free insurance products, and we use these kind of free insurance products to onboard millions of people to insurance for the first time. In some ways, free insurance was great as a way of onboarding those people that have never had insurance before onto insurance for the first time. We made it very easy to sign up. We made it very easy to taste insurance, and we made it very easy to get claims paid. We were paying claims within just 1 or 2 days. Very, very basic products, and the community was getting excited about insurance. They were seeing the benefits of insurance because people in the community were able to pay, to get a claim, and they were getting it paid very, very quickly. And then they were telling their friends, hey, insurance works, insurance works. It's easy to use. You don't have to be highly educated. You don't have to go to this capital city to make your claim. You can do it digitally. It's great. And so we wanted to capitalize on this by then saying, okay, these free products are not going to be available forever. These free products are going to be available just for 6 months or 12 months. It's a promotion, right? So if we want insurance to be there for the long term, then we want to convert people from these free insurance to start to pay for insurance from their own pocket. We found it to be incredibly difficult. So we found that actually it was much harder than we thought. So one of the big issues that we found was that there's a huge turnover in the staff, in the senior staff at a telco. These people, they move jobs, they move between the companies many times a year. And as a result, there really isn't a consistency. So if you launch these free insurance products and then you go back and you want to convert them to paid, it can be very difficult because you're talking to someone different at the telco. We also found that there was a lot of challenges around the payment channels. So, whether we should use airtime or mobile wallet. Now in Kenya, M-Pesa, everyone has M-Pesa, and you're very, very lucky. But actually, a lot of people use M-Pesa for cash in, cash out, right? So historically, a lot of people have used M-Pesa. They put money onto M-Pesa to send money to someone or to do something, but they don't actually keep much money on M-Pesa overnight. Increasingly, this is changing. Increasingly, more and more people do, in fact, keep money on M-Pesa, and they use it as their main wallet. But historically, that wasn't the case. And certainly outside of Kenya, in other countries, it's, they're a long way behind you. They're catching up. And so, whether or not we should use airtime in the same way as, people pay for ringtones, and they take little bits of airtime every day from your account. We can use the same mechanism to collect premiums for insurance. But we found that both of these methods have their own challenges. And then the final issue for us was the regulators. And in Kenya, you're very fortunate because the IRA actually is very progressive, one of the most progressive regulators that we've come across in Africa. Both in Ghana, I would say, and also in Kenya, the most progressive regulators and most innovative regulators in Africa. But in a country like Nigeria, which isn't as progressive, interestingly, quite often Nigeria is held up as being a shining light in sub-Saharan Africa. But actually, from an insurance regulatory standpoint, it's a very challenging place. And we found that there were huge arguments, in fact, between the regulators. So the central bank, the insurance regulator, and the telco regulator all arguing as to whose job it was to regulate these kind of payment questions. Okay, I'm going to give you another example. So this is another example. This is a mobile wallet. So Jazz Cash is a little bit like M-Pesa. So Jazz Cash, Jazz is a mobile phone company, and it has a mobile wallet called Jazz Cash. And we as microinsurer in Pakistan, we have a call center, about 300 agents now, who are actively every day calling out to these clients of Jazz Cash. We use the brand of Jazz Cash. So when we call out to someone, we actually say we're calling from Jazz Cash Insurance. And our agents on average sell somewhere between 6 to 25 policies per day. And these are policies that cost, say, around about $10 a year for hospitalization insurance. And so, these products have become increasingly kind of popular. We're selling a kind of hospitalization insurance. It's a very basic product, which provides a fixed amount of money if you're hospitalized for 2 nights or more. So it's an indemnity product. It's not a medical insurance. It's not a health insurance. It pays out a kind of cash benefit if you are unable to. If you have to go to hospital for 2 nights or more. I could give you plenty more case studies of kind of the ways in which we're using technology to bring insurance to people. Talked a bit about Telenor. Holiday Swap is a bit like Airbnb. We're using so people are swapping homes. So someone in America wants to swap homes with someone in Nairobi, and they want to go on holiday. So the family in Nairobi goes to the US, and the family in the US comes to Nairobi, and there's a holiday swap. But what happens if one of the children kicks over the television and breaks the television? So everyone who uses this website to change homes, it comes with a insurance embedded, which is provided by us, with a $0 deductible up to a maximum of $5,000 to cover things like breaking TVs, breaking some cups, or what have you. So it's a great way. Using websites to reach people is a great way of selling insurance. Gcash in the Philippines, this is a kind of leading mobile money provider, a bit like M-Pesa. And with Gcash, what we discovered was that putting insurance onto Gcash actually was a bit of a failure. So Gcash introduced insurance. They have a little bit like M-Pesa does. They have a menu, send money, receive money, buy airtime, and they had an insurance menu. And the insurance companies came along and they put their products on the shelf of Gcash, and it was a failure, really. No one was buying insurance because really no one wakes up wanting to buy insurance. So no one's going to open the wallet and suddenly buy insurance. So Gcash had a breakthrough when we were working with them, where instead of just passively putting insurance on the shelf digitally, instead what we did was that we waited until we saw someone using Gcash or using M-Pesa to do something like pay the school fees. So when we saw that someone was paying the school fees using the mobile wallet, we actually then sent them a text message saying, hey, would you like your kids to finish school if something bad happens to you? So no one is going to go to the mobile wallet to buy insurance. But when you ask someone a question, do you want your children to finish school if something bad happens to you? The answer is yes. And so guess what? The take-up rate of insurance when we target people, or when we see people sending money back to their family back in the village, and then we send them a text message saying, if something happens to you, if you lose your job, would you like that money to keep being sent to you, to your family? The answer is yes. And so digital can be very powerful, but it cannot be passive. You have to still understand the customer, and you can use the power of digital to reach them. Uber. So in the Middle East, Uber is called Careem. This is a ride-hailing company. We used our call centers in Pakistan to call out to the drivers of Uber, and we were selling them health insurance. And interestingly, when COVID hit, a lot of the drivers started to leave because there was no work. So when there was lockdown, there was no work for them. And so the drivers started to move away and do different things. And Uber realized that if they didn't retain the drivers, when lockdown ended, they wouldn't have a business. They wouldn't have any drivers to respond to requests for a ride. And so what they realized was that actually the drivers who had purchased health insurance were more likely to remain active with Careem because they needed their health insurance. They wanted the health insurance in these COVID times. And so what did Uber do? Uber actually gave health insurance to all of their drivers. And as a result, they managed to keep more of their drivers engaged so that when lockdown ended, they still had a business. I guess then the one that I would also talk about is 1acre Fund. 1acre is a large rural microfinance organization out there in Kenya. It has about 500,000 borrowers in Kenya spread out across your country. And we're working with 1acre Fund to provide a funeral insurance and a health insurance, and it's embedded into their product. And what we found is that digital, you have to use digital in order to reach these people in the rural areas. So what we found is that these loyalty, there's been this kind of evolution of digital insurance. So these loyalty based products that were first introduced have been fantastic at reaching people and getting them on board. But unfortunately, they're a little bit kind of inefficient. So these loyalty-based products have kind of evolved a little bit into these target-based insurance products. So I gave you an example of Airtel. Airtel was a loyalty-based product. Those products evolved into the products that we introduced with, say, Telenor as a target base for free insurance. And now we're starting to see paid upsells to GSM. GSM is airtime. So this is where we're starting to see people now using GSM as a way of reaching the market. And then finally, we're seeing now kind of people selling insurance through call centers to the mobile wallets. Interestingly, though, ride hailing and e-commerce, this is really taken off in China, but we need to ask ourselves the question, why isn't it really taking off as well in Africa? So this is my last slide, a couple of key points that I'd love to leave with you, and then maybe we can have some questions. The first is that people trust their mobile phone company. They trust it because they use it frequently. So as insurance companies, we all have very strong brands. We all have strong egos. But I think if you want to sell to the mass market, you might have to put your brand to one side, because unfortunately people don't really trust our brands as insurance companies. So, looking at which brands we can use to reach people has been really critical for us in reaching 60 million customers across Africa and Asia. The second point I want to make is that it's really important to remove friction from the customer journey. So what we found is that we don't think we're competing with insurance companies. So we're not competing with AXA or CIC or APA or Lion or whatever. We're competing with apathy, right? We're competing with people who woke up this morning and have never purchased insurance, and we need to convince them that insurance is a good idea. So we're not competing with each other. We're competing with people that don't buy insurance. We're competing with apathy. And so you need to make it very simple for people to sign up. You need to make it very simple for them to pay for the insurance. You need to make it simple for them to learn about the insurance. And most importantly, you need to make it simple for them to make a claim, and to claim and for the claim to be paid same day or next day. I have seen many products, many bad products, which when combined with a good customer journey have been successful. But I've also seen many great products which have been combined with a poor customer journey, and those products have failed. So having a good product isn't enough. And as insurance people, I think sometimes we get far too focused on the product, don't we? And what I would challenge you is that when you're talking about the mass market, actually the critical component is not the product. The critical component is the customer journey. And then finally, I think this is an area that we sometimes get very hung up on, especially as regulators. And we worry about how much money is going to the mobile phone company. So I can go into this in more detail if people want, but using a mobile phone company to distribute your insurance can be quite expensive. But I think if you add it up in terms of how much it costs in Kenyan shillings, so if you were to design your own brand, if you were to promote your own brand, if you were going to create your own M-Pesa to collect the premiums, it would be much more expensive than the money that you have to pay to Safaricom to use M-Pesa. So when we look at the percentage of how much of the premium is paid to the mobile phone company, it can seem daunting. But if you had to create that yourself and pay for it in Kenya shillings, I think you'd find it would be much more expensive. So that's my presentation. I hope we're going to have some questions. If you do have any specific questions that you want to ask me afterwards, please do find me on LinkedIn, or please do feel free to send me an email, which is richard@microinsurance.com. I will stop sharing my screen, and Gabriel, maybe you could take over and we could get some questions.
Thank you, Richard. I think that was a very good presentation from where I sit. I think the challenges are out there. There are ways and means of getting to do what Richard was talking about, and I'm glad to know that several insurance companies are working in that direction. So let's pose questions for Richard. I could see while he was talking, there were a number of chats that were going on. Richard, are you able to access that?
Yeah, I am actually. So great. So I am going to just okay. I'm going to make this
both Q&A and chats. I think there are a few remarks.
Yes, absolutely. I'm looking here.
Yeah.
So the first one I'm looking at, and I'll try and work through them. The first one is from Winnie. It says, how are death claims dealt with in a case where next of kins are not updated due to easy sign up, like the India telco case? That's a very good question. So actually, the mobile phone company in India, when we looked into it, the law, so there was very clear law as to what happened when someone died who owned a mobile phone. So the telco regulator actually stipulates that the mobile phone, the SIM card, any airtime, anything like that passes to the next of kin. And they define in the telco law who is the next of kin. So what we did was when we launched our insurance product, what we said is, look, if we know the phone number, if we know the MSISDN, if we understand what is the phone number, if someone dies and we're satisfied that the person who died was the user of the phone, then we can pay our insurance payout onto the phone. We can do that by putting the money in the mobile wallet, or we can do that by charging up the phone with airtime. And we can, so the phone number becomes the primary insured, if you like. And if there is a claim against that primary insured, then we pay the money back to the primary insured, which is the mobile phone number. And what we relied upon in India was the fact that the telco law stipulated what happened in the event of the death of the owner of the phone. So we just relied upon that. We therefore didn't need to know who the next of kin was, because as far as we were concerned, we were insuring the user of the phone. And if something bad happened to that person, then of course we could credit that account. Okay, so that's how we dealt with it. The next question was from Margaret. So Margaret asked, are there any incidences of fraud in these innovative products? And actually, Margaret, I'm sure that, so I'm going to say, I'm sure that there is. I'm sure that there are fraud, because what we did was, if you think about it, if you look at what we did, I think there's a spectrum. At one end of the spectrum, you can have zero fraud, and it takes a year to get a claim paid, and you investigate every single little detail about the claim. And it becomes very laborious, very expensive, and very difficult. At the other end of the spectrum, you don't do any investigation, and every time someone claims, you just pay the money without any questions asked. And we took a position somewhere in the middle, which said, no, we're going to ask some questions, but we are going to also try and approach it from a viewpoint of paying claims. So I'll give you an example. It's not uncommon for us, say, for example, with funeral claims, that someone calls us up and they say, okay, my mother died, I'd like to make a claim. So we say, okay, can you please get us some documentation? Please, can you get us a police report or a medical, a document that shows that the person died? And if the person is in an urban area, it's sometimes possible to get those documents. But if a person is in a very rural area, it can be a very big challenge to get those documents. And so after 2 or 3 days, we actually call back the client and say, hey, how are you getting on getting that document? And if the person in the rural place says, I can't, I've asked, I can't get the document, then we'll say to that individual, okay, could you find out the name of the local, person in charge, right? Is there a pastor? Is there, a leader? Is there someone in the community who is seen as being a leader? And could you give us their mobile phone number? And then we call that person and we say, hey, this individual told us that their mother died. Do you know about it? And if the person and if their story is collaborated, we quite often pay the claim based upon just that. So we've paid claims on, by just phoning up an imam or a pastor and asking those kind of questions. Actually, we get far fewer claims than we anticipate. So actuarially, we only get about half the claims that we think should have occurred. So the problem with these products, when we're dealing with digital insurance to the mass market, is not actually too many claims. It's not a loss ratio which is too high. It's actually the other way. It's actually we find we get too few claims, and that's a problem for us. And we actually run adverts on the community radio stations, encouraging people to get in touch if they've had a problem. Okay. Next question I see is from Mary, who asks, sorry. Should I continue? Yeah.
Yeah,
so the next question I see is from Mary. He says, do you consider culture as competition, especially in an African context where we all pull together resources to pay for the risks when they occur, for example, health, funeral, etc.? Actually, no, Mary, I think that's a really good question. Actually, I don't see it as competition. In fact, in some ways, I see it as being the whole inspiration for what we're doing. So in Kenya, I believe you have a thing called Harambee. So, Harambee is where, when disaster strikes, you ask your friends and they all help you out. They send you a little bit of money, right? And so when we designed our hospital, when we designed our health insurance product, we started off doing kind of, health insurance, like the health insurance that we all know and love. But we found that this was very difficult, and it was very expensive to try and work out whether or not the medical claim that was presented was correct. Had they used the right tests, had they done the right investigations, had they used the right drugs, and trying to investigate those claims became a big headache. And so we actually modeled our hospital cash product on Harambee. So what we decided was that we would become one of the friends. So when you take a child to hospital, one of the things that you do as you're rushing to hospital is you send out to your friends over WhatsApp, please pray for me, please pray for my kid. And if, and also if you have any money, please, would you help us? Would you send some money? And so we wanted to become one of those friends. And so when we designed our hospital cash product, we designed it in such a way that it would pay out a fixed amount of money if you are in hospital for 2 nights or more. And it doesn't pay for the whole medical bill. It pays for some of the medical bill. And so, you still need to rely upon your friends, but we can become one of those friends and we can help people in their time of need. And so we've actually leveraged that culture and that way in which people currently do things to position our products as being part of that culture. Edwin says, insightful presentation, need a copy. By all means, please get one from the Institute of Kenya. If you can't get it, then you can email me and I'm very happy to send you a copy. Dorcas said, what was the claims frequency of the Telenor product and how were they handled, especially with no documentation, medical exam, age limit, and with no exclusions? Actually, the claims frequency was frighteningly low with that Telenor product. So I think the claims ratio was about 30%. So if we looked at the gross premium, as a percentage of gross premium, about 30% of gross premium was paid back by way of claims. But to me, that was far too low. And actually, I think we suffered from underreporting. So actually, there were far too few claims. We got to a point where we decided that actually we were just insuring the mobile phone number, and we recognized that actually in India and probably in rural Kenya as well, when you have a phone number, you're not actually just insuring one person, you're actually insuring probably a whole family, so one phone is actually used by many people. And so we actually priced it when we pulled the pricing together, we actually priced it assuming that we were covering more than one person. And I think that was probably true. Agnes asked, from a leadership perspective, what has been your experience in making these relationships successful, considering that there were so many stakeholders? Agnes, that's a very insightful question and a very good one. I think the most important, what's been essential to us as Microinsure has been that when we go and see a mobile phone company, we don't sit down and say, we're from the microinsurance company, here are our products. What we actually do is we go and we sit down with a mobile phone company and we say, what is your problem? And when you sit down with sit down with a mobile phone company, they'll say things like, I'm trying, I've got this problem. I want people to download my app. I want people to use my app. I want people to, outside of Kenya, open my mobile wallet and use my mobile wallet. I want people to take a SIM card. I want people to top up with more airtime. And if you can convince them that insurance is a way that you can actually address these underlying problems, then they are much more likely to launch your insurance and to own your product, to put their brand on it and to push it forward. And so instead of selling these organizations an insurance product, the way we approach it is that we're trying to sell them a solution to the underlying problems that they have in their business. And that's been critical in reaching so many people and reaching through these kind of shareholders. Then Nixon said, I'm really passionate about the persons living with disabilities like the deaf and the blind, and I'd love to know what you're doing to make sure that they are not left out. That's a really good question. So we don't, I mean, just to be clear, I mean, our products really don't have any exclusions. So, you know, for example, all of our products cover COVID-19, for example. All of our products cover pre-existing illnesses. So, you know, even if you had a disability and then you subsequently needed to be hospitalized for that, we would cover it. But I think probably what you're talking about here is how can people that are deaf and blind use digital to sign up for insurance? And, you know, I don't have an answer for that. I think that's a really good question. I guess my rather simplistic and answer is that people that are deaf and blind have learned to adapt, and so, you know, they have to adapt in many areas of their life. And I hope they would have friends and family around them who could help them. And so, if they do want to sign up for these products, they can of course sign up for these products, and they can of course be covered. But they would need to seek help from a friend to be able to do that. And I know that that's not ideal, because ideally they would be able to do it themselves. And then I see that there's two other further questions. Patrick asked, thanks for the eye-opening presentation. Kindly offer some insights on the importance of the customer journey mapping during the microinsurance product development. Okay, so in my experience, the most important thing is the customer journey, and everything starts from that. So, you know, it's a little bit like chicken. Is it a chicken or egg? You know, did the chicken come first or the egg? But in my opinion, it's definitely, in this case, the customer journey comes first and the product follows. And so, you know, you need to work out, okay, how is the product going to be sold? You know, is it going to be sold through SMS blast, through end of call notifications? Is it going to be sold through an outbound call center? Is it going to be sold through robocalls? You know, how is that going to work? Then how are people going to pay the premium? You know, so is the premium going to be in very small amounts collected from airtime? Is it going to be paid up front? If it's collected in small amounts, then, you know, we collect money in month 1 and coverage starts in month 2. You know, how are we going to communicate that? Are we going to send an SMS to people? Is that going to be okay with the regulator? All of these, you know, you need to get right into the details of exactly how these products are going to work. And once you've done that, quite often it almost designs the product by itself. So once you map out the customer journey, you literally get to a point where it's like, well, the only product that I could sell through that customer journey is this personal accident, or this life, or this hospitalization. Or actually increasingly we're getting demand for phone insurance for cracked screens. So we're starting to insure the screen against being cracked as a result of sorry, I just got a text. Is it from you guys? Okay. And then the final question I see is from Ernest, and it says, how is the premium charged? Is it annual or daily? Well, we have options for both, Ernest. So when we're selling to a mobile wallet customer, we would try and get paid up front. But when we're selling to someone who doesn't have a mobile wallet, and I know in Kenya, you're going to find this hard to believe, but there are people who don't have a mobile wallet, who don't have an M-Pesa, not in Kenya, but in other countries. And as a result, we sell quite a lot of products, and we do what's called DCB, which is daily carrier billing. So this is the same as when you buy a ringtone. So if you have a ringtone and they come and they take a small amount of airtime from your account, that kind of functionality, that's what we do as well. So we do that functionality as the microinsurance company, and we have our own IT systems which are integrated into the telco. And so that kind of daily carrier billing, that daily airtime deduction is done. And the way that works is that, you know, so for example, we would use our call center to call a client. They would sign up for an insurance product. And let's say that they signed up to a product that cost $1, or let's say they signed up for a product that cost 100 shillings a month. I'm using numbers, you know, so these numbers are just for example. and I'm using 100 because it's 7 o'clock in the morning and I haven't had a cup of coffee yet. So 100 is an easy number to use as an example. So let's say that they signed up for a product which is 100 shillings in month 1, in January. During January, we would go to their mobile phone account and we would try and take whatever we could collect from their mobile phone account, okay? And let's say at the end of January, we'd collected 100 shillings. Then we would send a text message saying, congratulations, thank you for signing up for insurance. In February, you're covered for insurance. During the course of February, we would then try and collect the small amounts of money from the person's account. And let's say that we tried to collect 100 shillings during February, but we weren't successful. We were only able to collect 50 shillings. Then we would actually send a text message to the person saying, we tried to collect 100, we only were able to collect 50. And so instead of having the full insurance that they wanted, we'd give them half the insurance because that's what they'd paid for in March. And then in March, we'd try and collect 100 again. And depending on what they paid in March would depend on what cover they got in April. So this is the way that we can use daily billing to be able to sell insurance. Okay, I think that's my time. It's 5 past the hour, and I think my time is up. Gabriel, back to you.
Thank you, Richard. Agnes, the director, wanted to make a comment. This is your time, Agnes, now. Agnes? Agnes Macharia, director, are you on? Is there anybody else with a burning question? You seem to have lost Agnes. So Richard, I just want to appreciate.
You can hear me now? You can hear me now?
Go on, Agnes. Yeah.
Okay, sorry about that. Richard, I just wanted, first of all, to say thank you very much for that beautiful presentation. You have seen by the number of questions which are coming in, how interesting the delegates you are able to engage us. And my comment is that there's something I will take home. And I know most of the delegates are going to resonate with this, that we have been told that we talk about doom so that we make people take insurance. And today we have learned that we can ask questions in a different way and be able to get customers. And like asking a question, do you want your children to continue school if you pass away? And then it's a better way of dealing with this issue. So that is the comment I wanted to say. There is a lot we are taking home and we have learned from you, and we really, really appreciate you in a big way. Thank you very much.
Oh, you're welcome. Thank you so much for having me. And it's a real privilege, actually, to speak to my colleagues and friends in Kenya. And so, yeah, thank you for having me.
Thank you, Richard. Edwin, there was a comment by Edwin whether the presentation is very good. That was an appreciation, and was wondering whether the presentation will be shared. I can confirm that Richard had shared the presentation with the Secretariat, IIK Secretariat, and hopefully they will be able to share with the participants going forward. Just once again, just to appreciate Richard for a very well presented paper and very insightful ideas. And I like the fact that Richard did comment, because sometimes we become very conservative and inboxed about competition. You know, the microinsurance is talking about is not really competing with the mainline underwriters, in my view. It is more of a complementary role, because we have a lot of uninsured people out there, and they are really reaching out the underserved, almost a social kind of thing for the community. So thank you very much, Richard. And I think he has posed challenges there. We have seen the markets open there. All we need is to tap into them and be innovative, and we can grow our businesses. Thank you very much, Richard. I think by a round of applause, thank you so much for for that well-presented paper. Over to you, MC.
Thank you so much for the wonderful session. Richard, we thank you for being with us. And of course, your voice is, you see the way you started your presentation with, it's a cool morning with a sweet breeze. That is a reminder of how we start our EPL matches during the weekend. So we were able to relate nicely.
Well, the sun has come up at least. So now I can go and get a cup of coffee.
Thank you.